Good morning, you're with us here on Business Today. I'm Abha Bakaya. Let's take a look at the headlines of this hour. Cooking gas squeeze hits the country. Hotel associations say commercial cylinder supply stopped from Sunday. Several restaurants to remain closed from today. The government orders refineries to prioritize domestic LPG consumers. Booking period also increased to prevent hoarding. U.S. President Donald Trump says he may waive oil-related sanctions, promises U.S. naval escorts for oil tankers through the Strait of Hormuz if needed, claims the war with Iran will be resolved very soon. Trump's claims soothe global markets. Oil prices plunge. Brent, Crude and WTI both now below 90. Gold and silver back up as the spectre of high inflation fades. Asian markets rally after record falls. Sebi chief asks investors to be calm and not panic in the current storm, says India is affected by the global events, but its fundamentals are strong, adds that the capital market regulator is strengthening its supervisory capabilities through smart internally developed tools. Shocking revelation in the Lok Sabha. MOS of Finance says the average health premium for individuals is up 23% in just 3 years. Data shows insurance companies are raking in profits and there's very little benefit for policyholders. Well, let's first take you through all the latest when it comes to equity markets as well as commodities. First up, gold, silver rebounding in opening trade. MCX back up, in fact, 11,000 rupees to 2.78 lakhs per kilo. It's a huge jump. MCX gold up 1,200 to 1.61 lakhs per 10 grams. So a nice move coming in this morning. Remember, we were seeing softening on these prices, and today a complete rebound and a very, very strong one, particularly on silver. The rupee has also opened stronger against the dollar. The rupee is at 91.93 to the dollar in early trade versus 92.33 to the dollar. The rupee has also gained 40 paise versus the Monday close. So now that the pressure is abating, we're seeing the rupee back to strengthening this morning. The major concern, of course, is going to be LPG, and we'll talk more about that in a minute. But let's take you through the equity markets and what we're anticipating in trade today. Yesterday, of course, we saw a massive slide. Nifty was down about, extensively in early week trade. But today, we're indicating a gap up on opening, 24,280 on the Nifty, up about 1%. So we're looking at a good start. Why is that? Of course, Trump's commentary that the Iran war will be over sooner than expected. Crude prices also suddenly seeing a deflation and actually cooling off back towards the 90 level, which is really good news for everybody involved. Oil and gas is up about 1% right now. 11,611 is what we're looking at on the screen. So we'll keep an eye on this. We're about 3 minutes to go to pre-open, so we'll see how things shape up this morning. But overall, looking a little bit better. Now, India is facing an LPG supply crunch impacting households as well as commercial users. Restaurant bodies have warned of possible closures, with supply disruptions already reported in cities like Bengaluru and Mumbai. The government has asked refineries to prioritize domestic LPG, even as efforts are underway to secure additional imports and ease the shortage. Let's go across to Aishwarya Patil for more on this. Aishwarya, how problematic could the impact of this be? How long could it take to actually solve some of these disruptions?
Well, LPG crisis in the last couple of days, especially for the commercial players, restaurant owners, hospitality sector has been facing a shortage. Now, some of our industry sources are suggesting that although from the side of some of these OMCs, oil marketing companies like IOCL, BPCL, HPCL, the supply is there, but there is an issue at the distributor level is what we're hearing, but still unclear where the issue really is. But the other aspect of this is also that there has been a government order, a mandate given to all of these oil and gas companies saying that they should prioritize domestic supplies currently as opposed to commercial supplies at this point in time for LPG cylinders. So largely this is for the hospitality and commercial LPG. Through yesterday, we've seen on social media across Maharashtra, Karnataka, even from Coimbatore, some of these restaurant owners and the hospitality, some people from the hospitality sector, even the associations of restaurant have flagged that there is a shortage of these LPG gases and that they will have to wait. Even on the domestic household side, the government has said that there has been a lot of hoarding. Some of these sources have also indicated that at a time when a
Sure.
family of four uh, used to order cylinders every 55 days, now they're ordering every 15 days. So, in order to curb hoarding, these moves have been and initiatives
Okay.
have been taken forth by the
Thanks for
government.
that, Aishwarya. We'll keep abreast of the situation there. Right now, just 5 seconds to go to markets opening this morning. Let's take a look at those ticks on your screen right now. And we're looking at a gap up this morning. Yes, 250, 260 points, 1% up on the index, 24230. Now, remember, after the kind of slide that we've seen, this is heartening, but it's no way a claw back yet. Nifty Bank up about 1%, and we've seen PSU banks particularly really hard hit in the current route that we've seen in the indices. Nifty IT today steady as well, up about 0.3%. We've actually already cooling off on those gains as we speak. So 50 odd points have already been chopped off and now inching back down towards 24,200. So in a matter of minutes, we'll just wait for the markets to stabilize in the next 10-15 minutes as well. L&T, NTPC, Shriram Finance, some of the names on the upside right now. We've got Geofin, Adani, Ultratech, so good solid gains coming in on some of the blue chips at lower levels. On the downside, a little bit of a pressure or just marginal cuts on some of those names on your screen, nothing major there. So right now, markets are looking healthy in early morning trade. I think we have Shailendra Bhatnagar with us as well, and we'll go across to him in just a second. We also have, at this point of time, Dharmesh Kant with us as well. So let's get both their views in. Shell, first and foremost, on opening ticks, how's the market looking this morning? We've also got expiry coming up, expected to be volatile.
Abha, what's really good is the breakouts that are happening in sectors such as MNCs. Look for ABB, look for United Breweries. Sectors such as India Digital, keep an eye out on PB Fintech. As always, look at strength that is coming into Marico and of course the strength that is coming into the entire MNC pack. So that's where the trade is for the day. Yes, we have strength across the board. This could be a dead cat bounce, which is really fierce. Look at the advanced decline, 1700 shares in the green versus 142 in the red. It's the weekly expiry, as you mentioned. I'll be focusing on banks. You'll see a very, very nice uptick on Nifty Bank because the price is way, way below the most immediate short-term moving average.
Absolutely. All right. And in fact, gains across the board. Auto is back up today, for example. So seeing a move there, we've seen auto completely cool off in the middle. We've got all the blue chips up. Interglobe is up 3-4%. We've got Asian Paints looking good. The NBFCs, L&T. So a whole host of names are seeing recovery buying coming in at lower levels. Dharmesh, good morning. Let's talk about what we're anticipating today. We've got expiry. We've seen huge volatility, a major rout yesterday, some amount of steadying today. How volatile do you expect the session to be, and how do you see markets stabilizing from here on?
Yeah, good morning, Ava. Good morning, Shelly. I mean, yeah, markets are likely to be volatile, way forward for at least next couple of weeks. But today, I think it's likely to be a green day on the backdrop of the better news flow which has been surrounding in. And at the same time, traders would like to book out and have some short covering rally. That is what we are expecting for the day. And there are many good sectors which were almost insulated from what has happened in the Middle East. They also got hammered, badly in the last 2-3 days. So for those sectors, I think fundamentally it's a good time for investors and short-term traders or short-term investors to get into there. And those sectors are basically, banking space looks pretty much attractive, along with where no damage is anticipated. At the same time, metals and automobiles. So these are three good, sectors where you can lay your bets on. Defense is a structural story in the making. So we have been recommending at every fall to our investors to acclimate there. So stick to these 4-5 core, sectors for, future, and you would be safe rather than being sorry.
Okay. Let's talk about banking for a moment. And I think the move that we saw on PSU banks, Dharmesh, was a lot to do with the impact on bond yields, on GSECs, on account of what was happening on crude as well, and the currency. But within the PSU banking space, what would you be looking at right now, given that everyone, including yourself, has just been talking about the opportunity when it comes to some of these names?
Yeah, well, I mean, the problem with such kind of a correction is that we extrapolate the bond yield for a 1 day, 2 day movement to the entire year, and then we do the valuation thing, which to
Yeah.
my mind is not correct method, and that's the reason why we get sharp bounces back again. So like crude 120, the entire analyst community was assessing that the entire year it will remain like 120. It was there only for a day. So such kind of, I mean, these are opportunities to collect quality stocks. I don't think bond yields movement will be sustainable and stickier for long term for the banks to have a negative treasury income impact. So that's the reason why I cited that it's a good time for after a healthy correction. And normally, see, in the time of scare, people who are sitting on good profits, and these were the spaces where you are having profit, they booked out. I mean, the hot money trading community, but investors were pretty much sticky out there. So banks, we are pretty much bullish on. What we are not bullish on is NBFC space. So the reason being, one is because of inflation being up. The cost of fund for these companies will go up, and that will eat into the margins of NBFC space. Secondly, there would be some cascading direct indirect impact on the MSME and the lower segment of the lending space, so which these NBFCs cater to. That will play out in Q1 and Q4 of this financial year, Q1 of the next fiscal year. So that's a space where we are advising to take profits or not to enter from an investment perspective, at least for a couple of quarters. Then we will see, and valuations are pretty much higher out there. So avoid NBFCs, but banks, public and private sector, both are good cherry picking out there. I mean, SBI, Bank of India, followed by Axis and IndusInd Bank, looks pretty attractive to us.
All right, great. Now, US President Donald Trump has said that he may further ease certain oil-related sanctions to help bring down energy prices amid rising global tensions. He also warned that the US Navy and its allies may escort oil tankers through the strait if supply routes come under threat. The announcement had a huge impact on markets, with oil prices plunging, Asian markets rising, dollar falling, and bond and bullion prices up as well. Listen in.
Big Fury, we're also focused on keeping energy and oil flowing to the world, and I will not allow a terrorist regime to hold the world hostage and attempt to stop the globe's oil supply. And if Iran does anything to do that, they'll get hit at a much, much harder level. I will take out those targets that were easy and that I mentioned just before. We'll take them out. So we're also waiving certain oil-related sanctions to reduce prices. So we have sanctions on some countries. We're going to take those sanctions off till this straightens out. Then who knows, maybe we won't have to put them on. There'll be so much peace. But when the time comes, the U.S. Navy and its partners will escort tankers through the strait if needed. I hope it's not going to be needed, but if it's needed, we'll escort them right through.
All right, Shell, 10 minutes into opening, we're holding fort, but we've cooled off on those gains. 24,172 is what we're looking at on the index.
Well, Abha, I can tell you, Mr. Trump is walking back, and that's exactly what is visible in 2 or 3 assets. One, of course, crude oil prices now 6% below, and of course, we've seen $120 yesterday, now just 90. So that's a very, very big relief for markets across the board. You will now see a very sharp cycle coming in agri commodities. Keep an eye out on sugar stocks, keep an eye out on ethanol stocks, and keep an eye out on distillery stocks. So all MNC and local wine makers and whiskey makers, Radico, UBL, United Spirits, sugar stocks, in particular Balrampur Chini, and of course the MNC space doing pretty well, and of course who can forget pharma. So that's the setup.
Okay, quite a smattering of names there. Now, let's also bring you a comment from the Sebi chief, Tuhin Kanta Pandey. He's urged investors not to panic amid global market turbulence triggered by the West Asia conflict and energy supply shocks. Addressing the 30th anniversary celebrations of the NSE, the regulator insisted that India's strong domestic fundamentals provide resilience even as volatility rattles global markets.
We are also meeting at a time when global markets are experiencing tremors of turbulence and volatility arising from Middle East war, choking off vital shipping lines and triggering oil and gas supply shocks as well as price shocks. Like rest of the globe, India too is deeply impacted by such developments. Yet, amid such uncertainties, India's domestic fundamentals have continued to remain strong, providing resilience. It's important not to panic at this moment, but to remain calm amidst the storm.
And rising global oil prices could hit India harder than most economies, with Axis Bank chief economist and member of the Prime Minister's Economic Advisory Council, Neelkanth Mishra, warning that the country's heavy energy import dependence leaves it highly exposed. He says that a sustained jump in crude could add nearly billions to India's import bill, potentially distorting the balance of payments if high prices persist.
In a 2-month increase in oil prices, the impact will be quite moderate. If you have about 50% of our oil demand is for fuel, and 50% is non-fuel. The fuel side, the government, because OMC are sitting on big buffers. For a long time, the oil prices were low, but the fuel prices at the pump had not changed. But now we have seen that these mosquitoes are an embarrassment. So there are some buffers there. For a few months, I think they can withstand that. So these prices may not flow through into retail prices of fuel. If this lasts longer, of course, then there are bigger implications. But for the remaining 50, I think there will be some impact, depending on what is the average price of oil and how long it lasts. It could be 30, 40, 50 basis points on the CPI side. Thankfully, that's not the primary issue that should bother the markets at this stage.
Ramesh, closing comments from you this morning. What should we keep an eye on, given that while Trump seems to have walked back this morning, nothing is ever certain when it comes to Trump, and the entire situation in West Asia is still on tenterhooks?
Yeah, I mean, that's the only certainty about Trump, that nothing is certain. One missile here and there, and again, his rhetoric will change and the actions will change. So you have to be very, so what we are advising our clients is very simple. If you are investing today, if you are buying a well-researched stock based on your fundamentals, be prepared to see 15 to 20% kind of a downside. If that risk appetite you are having, then this is a very attractive market to step in. And let's take a staggered approach. Don't put all your eggs immediately. I mean, staggered over to 20, 30% now. Even if you buy 10% higher, no harm, because if it is going to be in a stable and clear waters, so you will still be making decent money. So that is the kind of approach. And the sectors I spoke about, it has to be banking, defense, metals, automobiles. These are the only 4 sectors which I think, followed by some of infra and building materials, which 26 will see a good traction playing out there. So not to be scared, just be prepared that when there is a fall, it's not the end of the world. It will come back to the levels if you are investing in the right company at right valuation.
All right, Ramesh, we'll leave it there. Shell, thanks so much. And we'll wait and watch how closing shapes up at 3 p.m. Thanks so much for watching.